Good morning. How we doing, guys? What's up? Hope you guys having a good morning here so far. So, business first, as is typical around here. This morning, we got PPI. Okay, that's an important read that came in, and volatility from that should be pretty much done, at least as far as off the rip volatility. We may get some institutional orders coming through after the bell based on PPI, but we wait those out anyway. So as far as other news, Trump is currently at a round table. We'll see if we get headlines out of that. I haven't really seen too much coming through from Trump's roundtable so far, but we'll see if we get any kind of tariff news coming through off of that. And then we get Trump is speaking again at 10:40 Central. So adjust for your time zone. That's 2 hours and 10 minutes after the market opens. And we have a Fed speaker this afternoon, 1:05. We have another Fed speaker later on tonight. But that's about it. So between now and midday, like the end of the stream time, we really just have Trump at his roundtable currently, which will probably, I would expect, would finish up here relatively soon. We have volatility coming off of PPI, and then we have Trump speaking at an airbase at 10:40. All right, that's pretty much all we have as far as news. So we can trade to our heart's content here today. Opening bell is 10 seconds out. Let's see what we get as far as volatility off of the bell. Speaking of which, we should watch that New York candle open at the bottom of your screen. There it is. So there's the open of a New York session candle at the bottom. So market inertia wise, what did we talk about yesterday? Right coming into the bell, we were discussing how, Tuesday's candle looked like, okay, well, are we heading into maybe a little bit more of a trend mentality? And the answer yesterday really ended up being kind of not. The range on the whole New York session was not very large. It was a little bigger than the bodies we've been seeing, but as far as actual range, you look at those, the bodies are smaller in the past week or 2 weeks, but the actual range of the entire day, you include the wicks, was smaller yesterday than really the average we've been seeing as of late. So, still, coming into today, I'm thinking range bound. If we get nice channels at the edge of the big daily range, if there's not a continuation setup or a decent stop hunting mentality, lean into maybe, depending on volatility, negative reward to risk channel scalps. But if we get a big wide range opening up here off the open, maybe in the first 15, 30 minutes, continuation inside of the range is always on the table. Breakout continuation, if we can hunt some stops, is always on the table within reason, even in a range market. But that's my thought process so far here today. What's up, guys? How we doing? Whitewater Joe, good morning from Germany. How you doing? Rick, good morning. Exposed. Dale, what's up, brother? Trading Chris, how we doing? All right, so range on this opening bar here, it's tight. It's tight. We'll get an official read here in 10 seconds. It looks like it's going to be about 35 points. Which, man, 35 points off the open is not a lot. 33 points, goodness. Hopefully that opens up a little bit here. Kings, good morning. How we doing? Michael, Wonder, Keith, Jude, Josh, Scooby-Doo. Good morning, guys. How we doing? Welcome back. Joseph, how you doing? All right, here we are testing that little pre-market wick high that we saw putting in about 740. And we just pushed through there. It took out really any stops we were going to get out of that. About 5 points worth. Yeah, that's about right for pre-market levels, 4 or 5 points. Now again, look at this 5-minute chart. When we see something like this coming into the open, this has really been developing for about 4.5 hours now, this little uptrend. What I start thinking about is, okay, I know a lot of people are going to start taking bets to the long side. But what I really see here is a range, and the ascending pattern of it is, remember what we always talk about, it's 50-50 once the bell rings. unless there's clear news that's driving that move, but there really wasn't up until we got PPI here on this bar, 730. Okay, and that really, all it did was close the gap in the already existing range, right? I mean, the range already existed. This just filled it quicker, and we continued to do what the market was already doing pre-market. But when the bell rings, it's a different ballgame, and it's 50-50 whether or not this continues. So purely trading off of this pre-market little ascending range, for me, personally, it's not a great idea, so I don't. But we just got to let things develop after the bell and take good trades. Bruce, Jay Cotto, what's up, guys? How we doing? Savan, welcome. Welcome back. Brandon, good morning. How you doing? Oh, well, update on yesterday. So yesterday I ended the stream down 1 hour. So I ended the stream down. We took one trade. It was a loser. So we were down it was like 3,500 bucks when I ended the stream at about 11 o'clock Central yesterday. I left. I went and did some stuff. I had lunch. I sat down in the afternoon, maybe 1 o'clock. And I was watching, and there wasn't really a lot. And then all of a sudden, probably within the same half hour, there were 2 good little scalps. Now the range, did you guys trade yesterday afternoon? It was tight. The range was tight. The range that I was seeing was probably 15 or less. It didn't get below 10. I don't even think it got below 12. It was in the low teens. It was like 13, 14 on both these trades, which is kind of like my bare minimum. So I leaned pretty heavy in the negative reward to risk. You guys will end up seeing these trades, by the way, on like the weekend live stream or whatever. And I took 2 of them, and it ended the day break even. So it was no big deal. But once I took those two trades, volatility really started to fall off a cliff. It was getting kind of late in the day. It was getting really wicky, a little bit weird, and I walked away. It was time. All right, so ATR here off the rip. We're sitting at 16. Now, again, that's only considering 3 2-minute bars. But those 2-minute bars, I mean, look at the ranges on this thing. 22 up to maybe 33. That's tight. Let's see if Trump can say something a little bit edgy and get things moving. Again, in this market, we always need to be paying attention to random tariff news, because that can always hit. Kevin, good morning. Well, we're really holding on to that channel here so far. It's really apparent on the 5-minute. Again, that pre-market channel, these pre-market channels, these don't hold. This thing's gonna break here eventually. And when it does, I gotta be ready, because I would love to do some stop hunting. Well, you know what I would actually love to see? I'd love to see an attempted break one direction. I would love to see an attempted break, probably upside, and a failed break, and then a curl and a continuation step to the downside that would allow me to stop hunt the intraday lows. Those pre-market levels, stop hunting those, it's all right. It can be good for maybe a 5-point push. If it's really obvious, maybe a 10-point push. But intraday levels, I mean, usually 5-10 point pushes are the minimum for stop hunting. So obviously I'm looking for those. That's a 5-minute chart, by the way. Here's a 2-minute chart. Jay, good morning. Welcome back. Good to see you. Man, look at these wicks. Look at these dojis off the open. It's kind of nuts. All right, now, yesterday's New York session low was 21,275.50. Okay, we're kind of in that vicinity. That's right about here. That's yesterday's New York session low. Okay, now yesterday's New York session open was 21,315.75. So we are right between yesterday's New York open and yesterday's New York low, which is only a 40-point range. Which, you know, previous days, lows, highs, opens, closes, the market pays attention. It's not the end-all be-all. I wouldn't compare it to an S-tier level like 20K, but it's there. It's there. It's maybe a tier 1 or tier 2 level, maybe in between those two, I would say. Right now, volatility is so tight that it makes me wonder, is the market looking at this? Currently testing, by the way, the 5-minute 20 EMA. We're holding on to that here so far. That blue line. Mio, good morning. Welcome back. All right, so we're into 840 territory, which means we can start watching here for development, and then a couple more 2-minute bars. Really this one and then the next one, and then we can start looking at putting on some trades here. I think it's time for an update from you guys, by the way. Let's hear it. You all went from, at least a lot of you went from evals to funded. How's it going? Are we trading small? Are we scaling horizontally? Or are we trading, you know, 8 minis and blowing up? Which, if that's what you're doing, that's cool. But let's fix that. That's too big. Good morning, Marshall. Michael says back to evals, trading small, not changing. Clinton trading small and funded. Cool. Scrumptious says rough last week, blown funded back to evals. Treff's trading 2 micros. Bill Gunn, for the life of me, I keep blowing up my funded accounts from oversizing. Listen, guys, once you understand the data, like with a 1-to-1 reward to risk on futures, here's the truth. You don't have to believe me, this is just the truth. The futures market is very efficiently priced. Not quite as efficient as Forex, which I think is very tough to trade, especially with the lack of regulation, the weird broker. It has a bad reputation, Forex does for a reason. The brokers are oftentimes a little bit sketch, maybe, giving you whatever kind of fill they want. But futures is heavily regulated and not quite as efficiently priced as Forex, which means you can find edge and there's not a lot of screwiness going on in the industry. Okay, which is good. But the best probability you can find in the futures market, assuming a 1-to-1 reward to risk, adjust the numbers to make up the same percent edge depending on your reward to risk, is 60%, 55 to 60% probability at 1-to-1. That's about the best you're gonna get. That's what I'm always looking for. Okay, so if you understand that, then you need to understand the statistical probability that, hey, if I'm trading 10 minis in a 50K Apex account with a $2,500 trailing drawdown, how many trades can you afford to lose in a row before you blow the account? Figure that out depending on how many points you're risking per trade. Then run a calculation that takes 2 seconds. Okay, what's the probability over a month, you know, maybe a 50, 100 trade sample size of me blowing these accounts in that time? And I think a lot of you guys will be shocked. It's like, oh shit, I don't suck at this. I'm just trading too big. It takes 2 minutes to figure that out and run the calculation, and your eyes will open. Everyone trades way too big. And by the way, you're keeping all the props in business, which is, I guess, a good thing for all of us. But we don't have to do that, at least not here. Mitz says, good morning. Trading evals blew up yesterday. Pat, lost to 25K, still in my 50K PA account, scaling down. Yeah, blew up some evals, starting over smaller. Gang's always in the personal account. All right, we are into 844 territory, which means we are now on this next 2-minute bar. And really 845 is kind of the region, but this is the first bar that I look for setups on if the market presents them, because it closes at 846, okay, which is after my 845 allowance time. So let's get to it. Kind of watching this bar. We're still in this range. Okay, we were 60 seconds out from the close here. All right, 27 seconds left here on this 2-minute bar. You can see we're pulling on back, wicking back inside of the previous bar's wick high. See if the bulls can push us up out of there. Your goodness, we're going to wick back down and close red on that bar. This is really the culprit. You see this 5-minute chart, the 20 EMA? We are stuck to that like glue. It's candle test after candle test. Every single 5-minute bar since the open, we're just pushing, trying to push through there. Let's see if the bears can break this up. I think really the only thing that's going to cause this market to start moving, which is what we need, is a bear break. But I'm open to anything as long as we get going here. There we go. There we go. Let's get that ATR up a little bit. Right now we're currently sitting, what is that, below 20? Yeah, we're at about, well, about 20. We're at about 20 on the ATR. This bar should get things moving here. Nice big bear bar. All right, good. Good, good, good. This here will be, yeah, this should be the biggest range bar we've had since the open, which we need. 25 seconds left. Harrison says, one bad trade away from blowing this eval. Should I open my next one and take profit trader? I heard Apex has more issues comparatively and sounds like those are the two to choose from. Yeah, you know what? As far as issues with between Apex and Take Profit, I'd say they're pretty even in my experience. I haven't had a lot. I've had like one or maybe two with each, and they were solved. The reason you hear about Apex, by the way, having more issues, and I've heard that Apex is working on this. They know it's an issue and they are working to fix it. The reason you hear bad things about Apex is because gambling traders use it and then they request payouts and the payouts get denied because they broke a rule. Usually it's like the 30% rule, or, you know, a lot of times it used to be like the 5 days of $50 profit out of the 8-day minimum for a payout. People maybe just made, you know, they made money on like 3 days and they were red the other 5 days, but it was just a big 3 days. And then they broke 2 rules, really, probably the 30% rule also. And then they get denied the payouts. Now, Apex is getting better. They're slowly filtering things so that when you go to request payouts, it'll tell you like, hey, this account can't be paid out because you haven't had, you know, 5 days of at least $50 profit per account, or in this account, I suppose, since your last payout. It's filtering things out now so that it's it tells you when you can request, more so than just denying when you do request, which is obviously much more efficient. But to answer your question, I think if you're in an eval in Apex, I mean, give Take Profit a shot. Apex evals are cheaper, but getting to funded, a lot of people don't really understand this. Going from nothing to being in a funded account on the bigger accounts, like the 300K account at Apex is less, well, let's say the 150K account at Apex, because Take Profit doesn't have a 300K, they have 150K as the max. The 150K account is cheaper, quote unquote, at Apex than it is Take Profit, but like the 50Ks or the 25K is going to be cheaper at Take Profit than it is Apex, because with my code it waives the activation fee at Take Profit, but you still have to pay the activation fee at Apex. So the way that you save money is different, but you still save a ton of money using the code. Because at Take Profit gives you 30% off, which is like, wow, that kind of sucks. No, it doesn't, because you don't pay the over $100 activation fee when you pass, which is a big deal. Okay, but at Apex, you get 80% off, and you can pass in 1 day, which is upfront, like a lot of savings. But then you still have to pay the activation fee at Apex once you pass. So I guess it makes more sense, if you're not sure you're going to pass, to probably go with Apex. But if you're pretty confident you're going to pass and you're like, I just want daily payouts, then go with Take Profit. The real answer in my head is to use both. Use Apex to scale, use Take Profit for revenue generation more consistently. Michael, what's the activation fee for Apex? You can do 85 monthly or 130 lifetime. So how do you know which one to do? Well, you should have your business model. If you've been here for more than a day, you should have written out your business model, and that will tell you, because, okay, here's how big I trade, here's how long my average funded account lasts. Should I do the monthly or the lifetime? Yeah, I'll go lifetime. I always do the lifetime. You guys can see here that we're getting those shrinking bear bodies, big wicks to the downside. Here's a bull attempt at a reversal. We see these constantly in the futures market, especially in a range-bound market. Very common. Very common to see this. You see a big attempt at a push, and then shrinking bodies, and then a reversal bar. Yeah, listen, there's a lot of good props. Don't worry, I'll be making my rounds. Chiefs Kingdom. How does lifetime work for Apex? Well, you pass. Well, so here's the thing. When you pass the eval, after, usually it hits at like 5 o'clock, maybe a little later Central Time. They send you an email that says like, congrats, you passed. And then you go into your Apex dashboard and you go to the signatures, you sign, and then you go to the payment link and you can select. All right, do you do monthly, $85 a month, and you have to pay that every month, or you just want to pay $130 once and be done with it? And that's it. I mean, technically it's $130 up front, and then it's 1 penny. I think it's every 10 years after that, which is probably just a, I don't know, it's probably something to do with their accounting or something, but that's it. I mean, it's very simple. I always go for lifetime just because my average account lasts longer than what it would make sense to do monthly. Michael, any pointers for what to include in the prop trading business plan that you all should have written out? It takes 2 minutes. I've started and restarted so many times when I think I'm adding irrelevant stuff. Here's what you need in your business plan. You need the amount of money that you are able and willing to invest in doing this per month or per quarter, however you want to do it. Then you should do, okay, this one takes some data collection, by the way, okay? You should say, well, how big do I trade to meet? This is where people get confused. Okay, step 2 is where the confusion hits. How big do I trade so that I can lock in my average account length to be what I want it to be, funded account, before I blow it and then I move on, right? Which is part of the business model here. If you never blow accounts in 25 years, something's probably wrong. You're probably trading way too small and you probably have never taken a payout. So you have to walk that line a little bit. So it's like, it's kind of, again, it's a fine line that you should walk. But do you want to have to get new accounts? Do you want to trade really aggressively and big, and then your average funded account lasts 2 weeks, 10 trading days or something, and you look for 1 payout, and then, or maybe from Apex, you look for 1 payout, and then on average the account's gone after 1 payout? Or do you want to hold your average funded account for 6 months, which is on, you know, maybe the longer end, or a year, or 2 months, or 3 months, whatever, which would cause you to size down and trade smaller? The reasoning is you're always going to get statistical drawdown. Like, you're going to have a certain percentage probability of hitting a 7 trade losing streak or whatever. And it's like, okay, well, how many trades do I take on the average week or the average day? And then how long do I want this account to? Okay, how many trades would that be on average during the lifetime of this account? And then what's the probability of me hitting a however many trade losing streak or drawdown I can afford in this account based on the trailing drawdown? Does that make sense? I need that to make sense, okay? Because that's step 2 of the business model. And then step 3 is your ROI goal on your step 1, which is the initial investment. Okay, there's expenses in prop trading like everything else, but there's expenses trading personal accounts. It's the losing trades. Still watching here. We're getting a little bit of a range developing, but not a lot of clean action quite yet. We'll get something here. Now, by the way, a tool that's very helpful in doing this, and it seems like very few people have actually spent the time to take me up on this. I have zero affiliation with this site. I have no idea who coded it. I don't know anything about it. But I found an interesting site. If you type it on Google, coda.io equity curve calculator, it will run simulations with 300 trade sample sizes, and it will run 12 of them at once. So it will give you a lot of different scenarios and the statistical probability of certain drawdowns based on the stats you input. There is where you'll find your answer to step 2 in your business plan. And by the way, it's a free tool. No affiliation at all. All right, so I'm watching to see. This is a little bit aggressive, I gotta tell you. But I'm watching to see if this becomes a thing. All right, 1 second. All right, we're back. Just looking to see if that descending resistance becomes a respected level again. Now, this technically would be the 4th touch point, but you guys see this mushy rejection, I'd call it. We didn't get follow through. So if we had gotten follow through, I would short this, but we didn't. We're getting mushy, which a lot of times increases it always increases the probability of a push upside through. Jet, good morning. Yeah, guys, Vinny's got it right. That's how it works. It's relatively simple. Again, just type on Google. I don't want to type it in the chat just because I literally have zero affiliation. I don't even know how they make money or if they make money. But it's coda.io, equity curve calculator. It's a great tool. I mean, props to whoever coded that up for free. That tool alone, if you figure out step 2 in your business model using that could launch things for you. Because I know so many people trading prop are just flying blind. They have no idea. They have no idea what the probability of blowing their accounts is. No clue. I mean, come on, how are you supposed to make any money? Even if you can get like a one-off lucky payout once and Apex somehow approves it because you got lucky and stayed within their guidelines, how are you going to repeat it? If you have no idea how long your average account is going to last, how can you decide whether to consistently use monthly or lifetime for the activation fee? You just have you're flying completely blind. It takes too little time to figure this stuff out to not do it. It's just made so easy for you. You don't even have to do it on paper. There's literally a tool online that does it for you. All right, we are currently testing. So we broke out, by the way, of that nice little potential trend line. And we are currently testing this little ascending resistance that started pre-market. So I'm not really into including pre-market touches in after the bell setups. But I mean, we look at the 5-minute chart, this really tells the full story. This thing is in a tight range. Okay, we're holding that pre-market range. And these pre-market ranges, these things don't hold. So we're gonna see this thing break, but it's just a total 50-50 on which direction. Once it does break, there should be some setups on the table for me. Trick Biscuit, what's up, brother? What's going on? What's going on? How you doing? Man, we are stuck in this little range. It is green, red, green, red. Good to hear it, Biscuit. Remember, yesterday's New York Open was 21,315, and the low was 21,275. So we're now outside of that little 40-point range that we kind of got stuck in off the Open here today. But I mean, we got to consider now we're 60 points away from the break-even point of the day on the Nasdaq. We're red, minus 0.3%. The Nasdaq, that is. For me right now, I gotta tell you, what I would love to see, just to avoid all that, with the break-even point on the day, and with yesterday's shrinking bull body on the daily candle, right, for the New York session, I would really love to see this market just push down through 21,275, and just whether we range lower than that or maybe head into a small little mid-morning trend downside. That'd be fantastic, because ATR right now, if we look up top, is 26, which is good. It's above my kind of minimum of 25. Again, I still trade below that, but I started having to change a few things, like leaning into negative reward to risk with how efficient futures are priced, right? It makes sense for me to do that, at least. We're above 25, but, I mean, hell, just barely. It's at 26. 25 to 70 is kind of like my sweet spot. Peter says, Wrench, did you see that sell of 1,500 NQ contracts at the close last night? 21,399.75. No, I don't pay attention to single orders. The futures market is deeper than any one participant. But, I mean, I know it sounds crazy, but that sounds reasonable to me. Maybe people are making a big deal of it, but institutions are using a lot of money. So you're talking, what is that? That's $30,000 a point, which is a lot of money, obviously. But institutions are managing a lot of money. So if they have a big position and they're trimming it or something, fine. They might have accumulated a position, by the way. What happens a lot with these algorithms that a lot of people don't realize, if you watch like the level 1 or the level 2 equivalent in the futures market, what you'll see is a lot of little 1-2 contract orders going through all day. And a lot of times it doesn't mean that they're trading one contract. A lot of times what is actually happening is the algorithms at institutions that they swap in and out. They obviously have a lot of different ones they swap in for different market environments, swap them out. They have people that figure all this out. They're building a position. Okay, they're building in, building out, just based on what the algorithm is doing. Well, really what the market is doing, what the algorithm's deciding to do based on its running probabilities, based on past events, most likely. And they're building positions 1 or 2 contracts at a time, but it's all happening very fast. And then at the end, if they, catch a good position, maybe like a small trend or something, they might have accumulated a big position, then they trim it, and it's like, oh, look at these big giant orders. You got to remember, there's a lot of money out there, guys. $30,000 a point is crazy, but to an institution, that's a Wednesday. The futures market is bigger than I think a lot of people realize. It's a very deep market. I made this comparison yesterday. If you're trading like small cap momentum stocks, you're hanging out above the reef, the coral reef. Here, we're in the middle of the Pacific. This market's bigger than any one participant, even 1,500 contracts. All right. All right, I'm watching this bar here. We have 1 minute 35 seconds until this bar closes. Now, here, let's take a look. I don't like to look at it this way. I don't like to look at pre-market levels. Yeah, that's starting to get a little tight. I am interested because we have the low of day. Oh, Jeremiah, this is my kind of question. Isn't Chicago's finance scene built off the futures market? Yeah, for the most part. Yep. Yep, it's built off of derivatives. Listen, if you're trading, it's important to understand this, I think. I mean, you don't have to, but you want to understand the history of the industry that's building your life, ideally, right? Futures, if you're trading futures, you're not really like, this isn't like a New York thing. Crypto, like crypto is kind of trying to make its hub Miami. This has very little to do with Miami. And stock is New York. Futures and a big chunk of options, but mostly futures, that's Chicago. That's not New York. So if you love futures, I think you should, if you can, get to Chicago and take a little tour around the city through the Chicago's. By the way, I'm watching this here. We're wicking back up. Goodness, look at these bulls, just giving us nothing yet. Same idea applies here on this next bar. But Chicago's financial district is a beautiful spot. If you haven't walked around down there, it's really a great place. I know it gets a bad rap because of the South Side and everything, but a big part of that war, the South Side War in Chicago, like O Block and all that, that's been done. I mean, there's always like young kids coming up and trying to fill those shoes with whatever, but that was really like the 2010s. That violence kind of faded a little bit in the early 2020s, which is obviously a good thing. But downtown Chicago is really a beautiful city. It's very clean. It's just nice. It's a beautiful mix of modern architecture and like Art Deco style. It's a great city. All right, same idea applies here on this 2-minute bar. We have 44 seconds left if we can get a nice low close. Morning, Chris. How you doing? And by the way, the news coverage of Chicago, like, yeah, there's been instances where a lot of people go downtown and cause chaos, which I disagree with how that's handled. But the violence on the south side, like it gets this reputation of being like a war zone, and it is, but it's gang on gang. Not to say that like you should go walking around down there, but it's gang on gang. They're interested in getting clout amongst themselves, amongst each other. Which I think is also important to understand. Again, not that you should go down there. All right, we are getting a little attempt at a bull reversal here. Bull's still trying to hold that 20 EMA on the 5-minute chart. That thing's causing a problem. We're getting big old wicks. It's killing off volatility. But the good news is we are never more than 2 bars out from a good setup, really. So let's just get something developing here. By the way, if you guys haven't yet, please press like on the stream. Helps out tremendously. Seriously, it takes 2 seconds. Helps out a lot. Appreciate you doing so. What's up, Lee? Good to see you back, brother. There's a little push. Come on, somebody step out of the way and let the other side take this. Hey, Taz, good morning. How you doing? This 5-minute really tells the story. We're trying to hold. That's a pre-market range. Gotta tell you, I'm kind of shocked it's held this far. 47 minutes into the open, and that's still holding. It's gonna break. It's gonna break one way or the other. All right, we are back, baby. Still within this little range. Aaron says, Nico, what's your take on those traders who run on a treadmill while trading? I think it makes you dizzy, but whatever you're into. It's really tough to be moving around. You can't hold your head still while walking or running. So when you're moving around trying to analyze a chart, I think it's tough. But if you can do it, whatever you're into. All right, we got 33 seconds left on this 2-minute bar. Trooped out. Good morning, Nico. How's May going for you trading-wise? I had a great April, but May has been a bit slow so far. The first, I'd say, week and a half in May, we're going great. I've taken a bunch of payouts in May already. The last... Let me think. The last, maybe 3 or 4 trading days have been the roughest I've had in maybe a couple of months. But I'm break even in the last, like, however many days of trading. So, it's not a big deal. For that to be the roughest in a few months, I'm happy with that. Morning, Jared. How you doing? We're still hanging on to 26 on the ATR, which is good to see. That last bar had, well, just about the lowest range we've seen all day. 15. See if we can get that expanding a little bit. What really needs to happen here is you can see the range, the little ascending range, right? I'm starting to consider more and more, now that we have a couple of touch points off the open, or after the opening bell, I should say, trading that, really this. Look here. I would probably draw this. I wouldn't want to draw it like this. That's just very aggressive. I'd probably split the difference and draw it like, you draw it like this, like this. I'm going to leave it off. There's really not like a definitive enough way that I think most people would draw it, aside from the aggressive version with 2 touch points. So I'm going to hold off on drawing that, but I am watching that. The deeper we get into the day, I'd be open to trading that if it cleaned up a bit. But really, the quickest way to get us to a setup right now is to just get a little bit of stop hunting continuation going. And we can slap that on and break the ice here. Lee, I only get to trade the Asian session this week. You definitely are in trades longer at those times. Yeah, listen, if you're trading Asia, a lot of times you got to size up and scale in the ratio. Meaning your point, reward, and risk. It's tough to ask for, 40-40, 60-60 in Asia session. It's just not really going to happen. It's slow. And in my experience, I think Asia is the toughest session to trade, just because with how much you have to tighten in to keep your average trade duration reasonable as like a scalp trader, with how tight you have to go, you end up kind of just getting chopped. Now, a lot of people say they get chopped in the New York session, and then you look and they're risking like 6 points. It's like, yeah, no shit, you're getting chopped. Your risk is way too tight. You don't even give yourself an opportunity to be right. But Asia, it's really tough to find a balance. I think London is second best. New York is obviously best. For me. Maybe you make a ton of money in Asia, then don't listen to me. Hey, Mark. Welcome. Good to have you. Yeah, Vinny, I'd agree. We have a little bit of a flat top forming here in the last, like, 8 minutes. Right now, we need any breakout we can get. Here's the test of the 20 EMA on the 5-minute chart, which has been a problem all day. Let's see if these bears can push us lower, break us out of this little ascending support level. If we do end up seeing a test of that little ascending support we were talking about a few minutes ago, and we get a push that ends up ideally exceeding this last curl we saw just a few minutes ago, and then a retest, I would take that. Preferably to get us to a setup quicker, I would really want to see this just push downside and we get 3 consecutive bear bodies. That would be better for me. I guess I'm always kind of rooting, not that it really makes a difference, but I'm always rooting for the scenario that gets me to a setup quickest. Then once we get to a good setup, I put it on, let it work, accept the outcome. Raymond says, what's your opinion on nootropics and trading? Okay, this is interesting. I think for me, caffeine is pretty much it. But for trading, Now, this is going to sound like your grandma lecturing you, but the reality is, in trading, you have to be aware of your sleep quality. If you happen to be running a keto diet or something like that, you should understand that maybe you're one of the people who feels extreme mental clarity while you're on that. But you should understand that carbohydrates, glucose, is going to be the preferred fuel source for the brain. So a lot of people, when they're very low carb, they'll have what's called diet brain, and they just feel kind of dumb. And that makes sense, because your brain ideally would prefer to run on glucose. So I think eating clean, easily digestible sources of carbohydrates, essential fatty acids, getting good sleep, staying well hydrated is a big one. And then as far as nootropics, I just add caffeine and I'm good to go. I can trade without it just fine. As far as like medications, I think that is going to be so person to person that I don't even want to speak on that. If you're someone who needs medication because you have a condition or whatever you'd call it, and you trade better with it, fine. But I think a lot of people, they use things like that. And I'm watching this setup, by the way. This is a very important bar for me. If we can get a nice low close here, I'll sell that rollover. I think a lot of people start using those things like in college and they think it makes them better, but in hindsight, they realize it made them maybe worse. And by the way, if too much caffeine makes you anxious and shaky and impatient, that is a bad thing. So there is certainly a slot that you want to find yourself in. All right, we got 1:14 left on this 2-minute bar. Let's see if we can get a nice low close, which I would love, because then we can look to stop hunt those intraday lows, which would be a beautiful thing. Kwasi says, how do I avoid PDT? Well, you have a few options. You can go to, if you're trying to trade stock, you can use an offshore broker, which is a little bit sketchy because if they run off with your money, there's not really a lot you can do. Futures have no PDT, which is the beauty. They are a beautiful trading product. Or you can trade 40 seconds out watching this, or you can forgo a margin account and trade a cash account with single day settlement, which is a more recent thing. It used to be 2 days for cash to settle. So you have a few options. I kind of always thought the best option is probably to just trade futures if you got to avoid PDT. They let you do what you want around here. Okay, so we have 10 seconds out here. Now watch that 5-minute chart. Let's see if we can get a nice low close, and we are going to wick back upside. Oh, that is ugly. All right, same idea here applies on this 2-minute bar. Got a big old ugly wick, half the size of the whole candle. Now, by the way, here on the 5-minute chart, I'm watching this, okay? There's like a potential level here. I know that some bulls are going to be looking at that, like, hey, I'll buy that. But the first touch point was pre-market. That was the low of the Newsweek we got on PPI. So can we really consider that too much? I say probably not too much, but I know that they're watching it, so I'm keeping an eye on it. All right, we are 32 seconds out here. I would need to see this bear bar on the 2-minute chart. grow and close beneath the wick, at least, of that previous candle. See if we can get that going here. I will get ready just in case we do get it. There's a nice little push. 7 seconds. Ooh, we got a wick back. I'm going to give this 15 seconds here. Limit order out. No fill yet. Still no fill. I have a limit order out, and there we are. We will get filled there. So I am now sitting short. Okay, looking to stop hunt that intraday low here so far. So average price 21,264. At least that's the average price on the leader. Going to be a little bit of a variation in between the follower accounts, right? Stop up at 21,304 and take profit down at 21,224. Okay, ATR here is a little bit lower, so we'll see if we end up needing to do any kind of early management. It's not necessarily the plan immediately, but we'll see. ATR is at 23. Okay, we'll see what we get here. See if this makes a little push downside and works out for us. All right, a few points in the money here. All right, now the low of day currently sits at about 21,248. So that's my biggest interest. A push through there should be good for at least a 10-point move, at least a 5-point move, okay, at minimum. But at least a 10-point push, I would guess, down through that 21,248 if we can trigger the bulls stops to kind of chain react off each other. Now again, ATR is sitting at about 22, 23. So I'm watching that, which is below my 25, which means, hey, if I need to, I can manage a little early, lean a little bit heavier into negative reward to risk. But for now, I'm going to leave that order down there at 1-to-1. Pretty much break even on the trade. Bull's attempting a little reversal sequence here. Attempting is the keyword. We'll see if they can have any success here if the bears keep wicking them back. Now, the next news we have, by the way, if you are just joining us, is really not until an hour from now. Trump is speaking at an airbase at 10:40 Central. Okay, so right now, 9:40 Central, we're pretty much free and clear. All right, Bull's succeeding a little bit. About 13 points in the red as it currently sits. Well, that 5-minute bar just closed and rolled over, and that 5-minute, if you look, top left of your screen, is kind of small for you, but that turned into a very much so a doji. Which is interesting. It does show an attempt at a bull reversal. But when I put the setup on, we had a good setup, so I got to let this work, and then see how price action looks if we can, which is my ideal scenario, right? If we can take out some of these stops. I want to see us get through there and give that a chance and then watch price action as far as management. Okay, but right now sitting about 20 points in the red. Stop again is at 21,304. Yeah, 5-minute 20 EMA currently at about 295. Not that I'm looking at that to really save anything. This is a continuation trade. So let's see if the bulls end up making a nice little reversal sequence here. We'll see if I have to do anything. Okay, bulls making a hard push. Yeah, this market's staying a little bit range bound. Yeah, I really wanted to see those a little bit of stop hunt in action. It's at about 18 points in the red. What's up, Humple? Welcome. How you doing? Good time. Says, when you sign up for Apex, when you sign up for eval on Apex, do you have to pay a data fee? Nah, it comes with it. Comes with it, which is obviously a benefit. All right, well, bulls looked at this and said, you know what? We're holding this range, baby. We're not testing those stops. So we're getting close. Again, my stop's at 304. We got within really a point or two. Stop here is highly probable, and there we go, and we are flat. Actually, not quite. Now we are flat for a... We actually got pretty good fills. The L there is going to be a little bit less than 1R. So my 1R right now is 3,900 bucks. So that puts us down 37.57. This has been kind of an interesting streak. I don't like to focus on this kind of stuff because I know what the data looks like at the end. But just for conversation's sake, this has been the first time in quite a while, at least on stream, where I think I've had 4, maybe 5 days of losing the first trade of the day. Now, that doesn't necessarily mean that I finished red. I finished break even a lot of those days. But here we are again today, starting the day off in the red, which is just kind of interesting. I mean, we are... I start thinking, you know, market inertia wise, am I not seeing something? But the answer to that question is no, because we cover it every single day. I'm taking stop hunting mentalities, understanding that we are in a range, and that's fine. So, you know, it's not like I'm deep red these last 4 or 5 days. Well, I started at break even. I'm probably a little bit in the red now. But let's see what we can get here. So, let's disarm everything and get ready for the next setup here if we get something good coming along. Now, that 2-minute bar close that we just got about 50 seconds ago, that was kind of right at the 5-minute 20 EMA. So, I got to kind of hold off and let this next bar here develop. We got 60 seconds till the close of this current 2-minute bar. Now we got to pay close attention to all these little areas that the opposite side might find confidence in. Like you see the top right, well, and the top left, but the 2-minute chart, top right of your screen, very obvious dual touch point, little descending resistance. So we'll see if that comes into play. I would really prefer this market to just break one way or the other. Yeah, that red little, we call it a doji on the 2-minute chart that we just got. I wouldn't say that shoots us in the foot as far as a continuation back upside setup, because I gotta tell you, this market being as range bound as it is on the 5-minute chart, top left of your screen, we have to consider, hey, does this turn into a little descending channel from the ascending channel we saw coming in and through the open, coming into and through the open? So even had we not had that little red doji on the 2-minute chart as the last bar, I wouldn't be able to take a continuation here just because there's a very obvious, I know every bear is looking at that very clear potential descending resistance on the 2-minute chart. And they're probably going to step ahead of it, and bulls might sit down and say, okay, I got enough. Let's see if the bears take this lower. You know, it's a range market, so you got to be careful betting on breakouts until it makes sense. That's what I judge everything on. Hey, is what I'm doing, does it make sense? That last trade to me made a lot of sense. We broke out of a little ascending channel. We broke lower. We got a pretty good, I wouldn't say it was perfect. Continuation sequence downside. I had some stops down about 20 points. It would have been, yeah, about 20 points in the money on the trade. 15, 20 points for a little bit of rocket fuel. The idea was there. Just didn't work out, which is part of the game here. Again, you got to remember, guys, the best probability you're going to get in futures, and this is all you need. You can make a whole bunch of money with this. With a 1-to-1 reward to risk, the best probability you're going to find is 55 to 60%. That's all you need. But what does that mean? It means 40 to 45%, you know, over a very long duration of time is going to be losers. But doesn't mean you can't have periods where you have like a 90% win rate. We actually saw that. The win rate was extremely high for probably around a month. Yeah, it's been a little lower in the last 4 days, which is fine. Here we are, back again at that 5-minute 20 EMA. Man, I'm starting to dislike that thing. It's gonna break out one way or the other. Good morning, Peter. How you doing? Yeah, I mean, you see that. It's just so predictable. Look at this, guys. Here's a 2-minute chart. In a range, this is just a true range market. You see the bears step in, they just see this. 2 touch points. That's enough. Let's take a lower. Now, a lot of times what happens is you get a little mushy rejection and then a retest, which I can't take because you don't get follow through. You really only get 20 points of follow through, 25 points maybe. But if we can get a continued, not a continuation, but a continued follow through, a push lower, even if it came down just into this region and then a retest, that could be a channel setup for me. But for right now, I obviously have to leave that alone. Nothing there yet. No, Zach, you're missing a portion. So Zach said the problem is starting the day with a 40-point loss. Well, first of all, you should be trading the way that you trade. But he said the problem is starting the day with a 40-point loss, then ATR falls, so best case only getting 20 points back. Been like this all week. Should RR be adjusted? Not for me. No, you're missing the other factor, which is win rate. When you lean heavier into reward, and everyone misses this part, and it's just when you lean heavier into negative reward to risk, your win rate naturally rises. Now it's still a question: are you still able to find edge? Okay, you still have to have at least a few percent edge, but if you're running 40-40 win rate, if you have edge, is going to be probably 55-60% over a very long term. Okay, again, in the interim, it can be 92%, or it can be 30%, but over a very long time, you're probably going to end up 55-60% 1-to-1 in futures. Okay, specifically, when you start leaning into like 20-40 1-to-2 reward to risk, the win rate goes up. Okay, so no, it's not a problem for me. If the win rate was still 55-60% with a 1-to-2 reward to risk, oh my god, the numbers don't work. Yeah, obviously. But everyone gives so much hate. They're like, you got to be risking 1 to make 5. And it's like, all right, talk to me in 8 months if you're still doing this, because that is a if you don't have data on that to derive any sort of confidence from losing 12 trades in a row when you're risking 1 to try to make 5, that's going to be tough. But that's what everyone on YouTube spouts because it sounds good. You see this here, guys. We're getting this here. Look here. This is so common. You get this third touch, mushy rejection, and then you keep testing. If we can get follow through, then it's a tradable channel for me. This here, this is 50-50. I need to see it break, one way or the other. Then we can get back to it. Here's a little attempt at a break. That's what this market needs right now. Got a minute 10 left on this 2-minute bar. There's the rollover of the 5-minute. There's no setup on the 5-minute currently. "46 seconds on this 2-minute bar left. All right, I am watching here. Got some stops. Got some stops, both of which would be within range. Okay. 12 seconds, see if we get a nice close near the high of this bar. If we do, then I'd have to buy the rollover. And try to take out some of those stops, because we did just break out of that channel. Kind of a wick back. I gotta hold off and see how this next bar develops. I want to see a clean close. Okay, because at the end of the day, the bet is that those stops are going to get triggered. So I got to see a clean close. If we're going to be betting on at least an attempted breakout. I don't need a full-blown break. I just need an attempt enough to trigger those high of day stops, push me a little deeper in the money, and then from there, with a low ATR like we're currently seeing in the low 20s, then we decide, hey, do we need to manage this? And we let it rock. But right now for me, above 25 is let it work territory. Below 25 is, let's see how the price action operates territory. Oh, we got 57 seconds left here on this 2-minute bar. Look at this back wick. Oh, man. 10 seconds left here on this bar. I mean, I will get ready just in case, but I can't imagine we're going to get a big old push. Yeah, see that? We're closing inside of the previous bar's wick. So Tubed Out says he's going short. So listen, when you get a shrinking bull bar like that, what we really have here, probability-wise, is a low probability, high potential reward to risk trade for the bears. The probability of getting a full-blown reversal is, realistically, it's relatively low. It's not super low, it's relatively low, but the potential reward to risk is high. Hey, Corey. Appreciate you. Good to see you. You can see here the bears are attempting a little reversal sequence. See if the bulls can just take us higher and push through those stops at the intraday highs. Now, by the way, as far as yesterday's New York session, we are clear of the low, especially, but we're also clear of the open, which again was 21,315. So yesterday opened right about here. Yeah, but I mean, look at that 5-minute chart. I mean, this is just range bound. Not a bad close. However, if I can help it, I'm not huge on entering on top of the hour bars, because you get a little volatility like this. When you get volatility like this, it can start to kind of shoot the data that you had at the close of the previous bar in the foot. It's 10 a.m., right? So you get that little volatility, and it can shoot it in the foot. Doesn't mean it's going to, but it's just, for me, it messes with the data a little too much. Now, listen, if it's a beautiful setup you guys have seen. I will put it on, but I wouldn't say that was a beautiful setup. It was a good setup, but we had a doji in the middle. Right, it wasn't 3 consecutive clean bull bars, growing bodies. Really not what that was. Now, again, I would have loved, had we had that, to try to take out some of these stops, man, but we're only 11 points away from the close of that previous bar at this point. We got 12 seconds left on this 2-minute bar. Yeah, there's going to be a doji rollover. All right, we have a few bars of work to do. I'll tell you what, I'll be back in a couple minutes. Don't go anywhere. All right, we are back, baby. So we finally broke out of this range. We are in a slow grind higher. But, I mean, show me the setup. There isn't a setup. By the way, it looks like it would have been this big winning trade, but volatility is so low, we've only moved a little over 20 points since this potential entry bar, which, by the way, wasn't even an entry bar because it was so ugly. But we're starting to get closer here to a setup. We are 26 seconds out here from the close of this 2-minute bar. If we can get a nice growing bull bar here, I would slap that on. All right, let's see here. 5 seconds, see if we can get a nice close at the high. There we go. Limit order is out. No fill yet. I'm gonna leave my limit order at about 86.75-ish. Give it 15 seconds. There, and we just barely got a fill. Okay, so we got a little bit of a pullback and we got a fill, so we are now sitting long. All right, average price, 386.75. Stop down at 21,346.75. Take profit up at 21,426.75. Though ATR is at 17, so leaning hard into maybe some management is not off the table. So we'll see how this goes here as far as price action, because again, volatility is low here. It's not going to stop me from trading, but it might change the way I manage things slightly. All right, 8-10 points in the green. Yeah. All right, let's see how this bar closes. We have about 37 seconds left here on this bar. Though if we get a hard pop up through 21.4, which is a tier 3 level, so I'm not concerned with that on its own, then I would be ready to slap down a take profit order right around 406.75. Well, let's see how this bar closes here. And 16 seconds out. Currently 9 points in the green. I'm getting a bit of a wick back here on the close. Okay. Not the cleanest close in the world, but a nice clean setup, so I'll take it. All right, for now, I'll leave the take profit as is, up at 426.75. Just in case, by the way, we get like a news bar or a quick expansion in volatility, I would prefer to capture that. I do think there is, it does improve your edge a little bit to leave that open-ended, because it is open-ended to the downside, right? So, but if you're going to manage early, then you got to be quick to do so if you decide to do so. But I prefer to leave my order at 1-to-1 just in case that news bar comes, which every once in a while it will. I actually had that happen yesterday afternoon. Muhammad says, I just opened your stream. I'm actually sitting short. This is bad to see. Listen, I think a lot of people would benefit from understanding you can be short and I can be long, or vice versa, and we can both be wrong or we can both be right. It's just a time frame difference. Okay, you can make money doing separate things in the exact same moment, depending on your time frame. So it really isn't fair to say one side is right, one side is wrong. It really depends on their management and their average trade duration. All right, still in the green on the trade, but we're kind of stalling here. Just see if volatility can pour back in a little bit. ATR falling below 17. We're now at 16, by the way. All right, so we are getting a bit of a push, so I'm going to go ahead and place that take profit at 406.75. See if we can get 5 more points here. A little push up through. Come on, Bulls, give us 4 more points, 5 more points. Little more. There we go. We are out there for a winner. So that is going to be negative reward to risk, okay? So that increases the win rate, obviously, the way that futures are efficiently priced. And if we do the math here, that is a, what is that? That's a $2,000 about winner. Okay, so on the day now, since that first trade was a 1-hour loser, and that was maybe a little more than about a 0.5, maybe a little more than a half-hour winner. So we're now sitting, well, actually that first trade was less than a 1-hour loser because we got good fills, if you recall. So we are now sitting about 0.4R in the red. So let's see what else we can grab here. Again, with ATR this low, it's at 18 right now. That last bar expanding helped us out a little bit. But ATR is at 18, so let's see what else we can get. Probably going to be looking still to lean into negative reward to risk with volatility as low as it is. Which again, is not a bad thing. It just changes the data. It's not better or worse, it's just different as far as the data is concerned, because everyone forgets about win rate. Look at how ridiculous that little move is. Goodness. But I gotta tell you, you look at the 5-minute chart, we better thank our lucky stars that this thing broke out of that little channel. We talked earlier in the day, those pre-market channels, we saw a little ascending channel all the way from pre-market. It just widened out a little bit once the market opened, but that was all. Or really, it started to widen out once we got a PPI at 7:30. But those channels, they don't hold. So here we saw the breakout now. By the way, we are at the break-even point on the day as far as the Nasdaq is concerned. So that's something of interest to watch. Pumple says, would you say that the break of day point, break-even point on the day, acts as support or resistance in a way? Yeah, the market has been, honestly, these last couple months has been more resistant than usual about going red to green or going green to red, and it tends to hover around break-even for at least a period of time that's longer than I would say normal. So all right, you guys know what I'm looking at here now, right? We can get a nice little reversal. I'm not too worried about this 20 EMA on the 2-minute. The 20 EMA on the 5-minute, which is a lot more relevant, is at 21,335. So, if we could see a nice close near the low of this bear bar, I'd have to put on a little reversal continuation trade, assuming we have plenty of room before the 5-minute 20 EMA, which plenty of room for me in this volatility environment. I'd probably be looking at least like 25 points minimum. Hey Lars, welcome back. How you doing? Mitz says, is RSI useless in futures? I hesitate to call anything useless because in reality, if somebody makes a bunch of money using something that I don't use, have at it. Use it more. But for me, RSI is pretty useless for most things, but especially in futures. At the end of the day, I think for me, price action will always be king here. You know, things like MACD, RSI, they're just a little... They're oversimplified because they lack context in a lot of ways. It's making a calculation without the context of what's actually going on in the market. So I think RSI is mostly helpful on a daily chart to give you some kind of indication if there's no news making the move. Like if the market's crashing and RSI is very, very low, if you look at a daily chart and it's like, wow, the RSI is super low, and here's the kicker, if there's no news, because the RSI doesn't take news into consideration. But if there's really no news and it's like, wow, this looks really oversold, then maybe it could be helpful for you. I just rock without it. I haven't used the RSI, or the MACD for that matter, in years. Alright, so we did not get any kind of downside continuation, which is fine because, to be fair, that 5-minute 20 EMA may have become an issue anyway because it was getting kind of close. But, I mean, we've talked about this every day probably for the last 3 or 4 days. You get this really clean push, whether it's upside or downside, in this case, of course, upside. Really clean push, and then we start to widen out. Happens all the time. So now's the time to be on the lookout for either curls backside with continuation backside or channel scalps. That's what we're looking for. Muhammad had missed my stop with 1 tick on NQ, still sitting short, huh? Yeah. But I expect to see this widen out probably into a channel. It looks to me like this is very early stages. Maybe we see a descending channel, whether it's descending, flat, ascending, I don't care. But widening this thing out into a channel would not be the worst thing in the world right now. Because to get, well, let's say this. For me right now, what I would love to see to offer some more setups is a nice descending, widening out channel, maybe at least 30, 40 points wide, or just a curl over and a break downside through that EMA on the 5-minute chart, the 20 EMA. That's what I'd like to see. Right now, we're right back at that break-even point on the Nasdaq on the day. We're currently green 0.01%, now 0%. Which, you know, there's a reason we tend to hover around here. The market is, again, hesitant lately to go red to green, green to red. Caden says, Nico, any advice on how to not get discouraged when on a long losing streak? Here's the answer, and this is the real answer, and this is not a quick fix, so everyone's going to tune me out here, but I'm telling you right now, this is the real answer. The real answer is losing money hits a very lizard-like part of the human brain. There have been countless studies done on this, and it's extremely difficult to control. The only way to fix this problem, not feeling like shit while you're on a losing streak, is to have a bunch of data that you can look back at and say, all right, it's been a week, but I have weeks or months or years or decades, but at that point you'd figure it out by then, of winning data that tells me, yeah, when this happens, it doesn't matter. All I have to do to fix it is keep doing my job. And then you don't care. You don't care. I care less. Here's the reality. I care less about the outcome of any individual one of my trades than some of the people in the chat care about my trades. I don't care because I'm here to do my job and leave, and then I get the result if I just do my job. That's how you fix it. So the way that you get that data is you trade really small. And you take trades and you test your setups. You get the data, you say, okay, you know what, when I trade with 1 micro, I did that for a few weeks, I made money. This setup was my best setup. All right, here was the market inertia, the market environment. When that happened, cool, I'll take that into consideration, let's keep doing that. And then you have 3 days of red and you're like, whatever, I've been here before. Or not. But it doesn't matter because you're like, well, the market environment hasn't changed that much and I'm still just doing my job. So here we go, the statistical losing streak that was going to come, here it is. And you keep doing your job. Debo bought 550Ks with code BIG yesterday. Let's go, Debo. Code BIG, B-I-G, Take Profit Trader and Apex will give you the best deal always. Zach says, I've run the data 100 times. I'm just so early in this and have yet to take any payouts. It seems too good to be true, especially after 3 days of red, but trusting the math and stats. Well, Zach, how much data do you have? How long has it been? You will lie to yourself. Numbers do not lie. But when you're on a losing streak, you might have 3 months of data that say, you know what, this works. I'm good at this when I follow the plan. My plan is well developed and I make money. Okay, see, 4 weeks, that's a pretty, it's not 1 week, but it's not all the data in the world. But would you rather trust 3 days or 4 weeks? I'm gonna go with 4 weeks because you will lie to yourself to try to self-sabotage, talk yourself out of this, tell yourself you're wasting your time. But at the end of the day, you will lie to yourself over and over. You know, that's how the human brain operates when when things aren't going too well, even in the very short term. But the reality is that the data is more important than what you're telling yourself. Now, if you have 4 weeks of data and then you're losing money for the next 3 months, then something probably needs to be adjusted, right? But right now, a few days of loss compared to 4 weeks of success, that's not even a comparison. Nah, Pumple, we got 5. Mitz is correct. 5 more days of Apex, 80% off, single day pass with code BIG. And then we'll go back to whatever. You never know what's coming after the deal. All right, so you see here, we are widening out currently into a flattening range, which, I mean, we just talked about. This is very, very common. I would prefer to see this widen out. Really, this range right now, we're talking 20, 30 points wide. It's a little bit tight. It's a little bit tight. Neil says, well said, Nico. You cannot be a consistent, successful professional trader without a proven edge and a probability mindset indifferent to each individual trade. Otherwise, you're just gambling. Could not agree more. This is a business. Treat it as such. All right. Thank you, Vinny, for the reminder. Good work there. Trump is having a little speech at 10:40, which is 2 minutes out. Michael, just started journaling trades with emotions plus data. I realized I wasn't going to be able to skip the process, got close to multiple payouts, but hoping this step along with more studying and chart time does it. Oh, I'll tell you this much, Michael. It's not going to hurt. And you're right. You're right. To make this a multi-decade, or even just multi-year long career, but most likely multi-decade. It just can't be done without understanding the probabilities, without understanding your data. It's just not possible. To make lucky decisions on going off of nothing without having any understanding of like, hey, when I make this discretionary call, what's the approximate probability of success? If you have no clue and you're flying blind, I mean, come on, this is a business. You have to know your data, and it's not difficult. I get pushback on this all the time because people are like, I don't have time for this. I've never done it before, so I'm not going to do it. It's like, okay, well, you haven't been doing it. What result has that gotten you? Straight up. Jeffrey says, I got a message from you in Discord. I'm going to stop you right there. That is not me. No. I do not trade anyone's money. I do not have a crypto thing. I don't do any of that. It is a scam. It's a well-known scam. Unfortunately, some people I have heard have fallen for it. They do this with every single person who's on the internet. And it's a huge operation that Discord needs to do something about because there is nothing that I can do about it. I have tried. I've tried endless things. We can't stop it. There's nothing you can do. So block them. I will never message you on Discord first. And I definitely won't reach out saying, hey, can I trade your money for you? I guarantee this return. That's not going to happen. All right, so we're still in a sideways channel here, so I can't take continuation there as much as I'd like to. It looks like a clean setup, but we're in a sideways channel. So in a range market, in a trend market, that's a setup that I would take. We're not in a trend market. We're in a range market. So I got to hold off on that until we get some more information here. Muhammad, Nico, I'm sometimes like, the market cannot be this easy. It's just green and green and green and green. Comes to a resistance, pumps. I go up just buying dips. Well, that in a trend market, that's how it feels. But don't push back on that feeling. Lean into it. Okay. Those kind of trades are what in the industry is called the easy money trades. The trades that have a good probability, a good edge, and it's quote-unquote easy money. It's not guaranteed money, but it's quote-unquote easy money over a big sample size when you know that you have data on this, and this tends to work for you in this market environment. And the easy money trades pay the bills. Okay, or at least they, they pad your P&L for maybe the trades that are slightly lower quality that you still need to put on. Don't, when the market feels like, it cannot be... Either, as long as your risk is managed and you're not like taking 3-point winners with no stop loss, if that's what you're doing, that might come back to bite you. But if you're managing your risk properly and your data's looking good and you're taking trades and you're like, I just win and win and win and win. Don't push back. Lean into it. At the end of the day, you're here to make money. So if your risk is covered, you're not wide open to black swan events, and it's working, it's working. Keep doing it. Don't be like, there's no way this is real. I don't know. I better not do this anymore. That's another form of self-sabotage. But waiting to see if this thing can break higher outside of this little sideways range. I imagine we're probably going to see a little ascending channel forming here because we are in a range market. We're not really in a trend market. Yesterday's, by the way, New York session high of day was 21,419.50. So we're now about 10 points clear of that. So keep an eye on that. All right, there's a half decent close. Now, watching this next bar. Here, for context, I got to show you this. Here's the 2 minute, okay? This is really aggressive. I almost don't even want to draw this. All right, but that, you know, we got to consider that that's going to be there. So let's do this and just get it out there. Because you know that some bears are going to be looking at that, but there's a lot of room. Okay, so I'm watching the close of this bar. We have 1 minute and 18 seconds left until this bar closes. And we're pretty much clear. We are clear. We're 50 points in the green on the Nasdaq here today. Okay, so let's see here. Again, 60 seconds out from the close of this 2 minute bar. If we get a nice clean close, that's a trade that I got to put on. ATR is still below 19. So leaning into negative reward to risk is potentially on the table. We would see how that works. Meaning the price action while in the trade if we get an entry here to begin with, which is going to require not much of a wick back here. All right, 27 seconds out. All right, now we'll get ready. If we get a nice clean close here, and that's the trade I got to put on. A few seconds. All right, and I'll take that trade. Got a pretty decent fill. Average price, I'm sitting long. Average price, 21,439.50. Stop down at 21,399.50. And take profit currently up at 21,479.50. Though again, with ATR volatility being low like it is, we may manage things a little differently. Let's see what we get. Stevo says, what hours do you normally trade? Do you have a cutoff? For futures, let's talk just futures. I trade from, obviously, the start of the stream. I kind of start at like 8:45. And the trading, that is. I'll start taking setups around 8:45 if the market gives us something. And then I usually trade till, depends on the day, usually around 11. And then I'll usually go eat lunch and kind of hang out or do whatever until during the middle of the day. And then I'll usually sit back down for the afternoon and just see if there's anything decent. If volatility has collapsed and there's nothing, then I'll walk away. Or I'll trade for anywhere from 30 minutes to 2 hours in the afternoon. But it depends on the day. If the market's very volatile, I might sit here all day. If the market's dead, I might walk away at 11 and be done. A little green on the trade, break even. Couple points in the money. And volatility is a little low. ATR here, where are we sitting on ATR? ATR is currently about 17, 17. A little bit of a pullback here out of the Bears. 15 points or so. Oh, listen, again, it's possible that we end up seeing a little bit of an ascending channel here. So I'm considering that because I know the bulls are going to be watching what kind of may end up being the lower end of this channel, at least watching it. Now, can they hold it up? Remains to be seen, right? But my stop is down at 399.50, which gives me plenty of room to see that. All right, Bears trying to pull this back here a little bit. Still just about 15 points in the red. Again, volatility's low. So this trade taking its time is perfectly normal this time of day here. Debo says, are you ever worried about longing into a high like this? It's usually a good place for a reversal. Well, I think that mentality would shoot every continuation setup idea that has performed very well for me over the long term. That would shoot every idea that in the foot. And I think that mentality, especially in a trend market, can get you hurt. So no, I don't worry about it. If it turns around and I happen to catch the bottom on a short or the top on a long, at least the temporary top or bottom, and it turns around and stops me, that's fine. It's fine. It's not a big deal. It's one trade out of many. But no, essentially, if I were worried about longing, like a buy high, sell higher mentality, if I was worried about that, I wouldn't trade any continuation. But I do. Tim says, you're a trend trader, not a contrarian trader. No. I trade both. I trade continuation when it calls for it, and I trade channels when it calls for it. So I think you got to be both. Being one or the other, you end up sitting on the sidelines for big periods of time. Like if you're a contrarian, you end up having to sit in trend markets. If you're a trend trader, you end up sitting around waiting for trend markets, which don't come around all that often. Alright, now ATR is currently sitting about 16. Okay, so we're relatively low. But that's alright, we're not like down below 10 or 12. But we're well below 25. For now, we gotta let this thing work and see how things go here. Lance says, Nico, I'm new to props and I'm struggling with separating my mind from the money, even though it's just the cost of the evaluation. Any help to offer? I'm trigger shy. Lance, there are two things that you should do to cure this, at least help in a big way. Trade smaller and try to trade quality more often. Don't trade more often at the expense of quality, but try to take quality trades more and trade smaller. Rip that band-aid off, learn the lessons for as cheap as possible, and then you can kind of borrow the confidence that way by kind of floating just the cost of the evaluation to get data, and then the confidence will slowly start to come, and when you have the confidence, then it's off to the races. That's the real answer. All right, we are 25 seconds out here from the rollover into the 12 o'clock Eastern bar. That's the 11 a.m. Central bar. See if we get any volatility on it. All right, it's relatively calm, which is a good thing. Sadef says, been doing that, meaning trading small, trading a little bit more often. Been doing that and it's helping. Small wins, but staying in the game at least. Listen, guys, the answer in the early days is to trade small enough. By the way, I'm back to green on the trade. I'll break even-ish. Is to trade small enough to stay in the game long enough to develop that edge. And then once you have the edge, you have the confidence. And then it's off to the races. But in the early days, when you don't really have the edge, it's not your fault, by the way, it's just the way it goes for everybody in the early days, you want to borrow that confidence for as cheap as possible, which means don't trade big. Trade small, swallow your pride, get the data, then you have the confidence to scale. And your trading will go a lot smoother if you listen to that very basic advice. All right, Bear's pulling us back here into this kind of sideways channel. We definitely have a bit of a flat bottom. Okay, so I'm watching that thing. Now, volatility's low, okay, which means that it's not going to accumulate, the stops I'm talking about are not going to accumulate nearly as quickly. But you look like this high, right? The longer we're here, trading in this little sideways range, assuming, you know, as long as those bulls can hold that flat bottom, which I would need them to do so, or at least avoid a hard downside break. There's going to be a few stops up around, you know, 446, 50-ish. I'm not, you know, betting the farm that every single short has a million stops up there. But the longer we're in this sideways range, the more time they have to accumulate up here. It should be good for maybe a 5-point push. You know, which is helpful. So I'd prefer to see that eye of day at least make an attempt, obviously. We were less than 10 points in the red, so All right, Bulls, come on now. See what you're made of here. Back to green on the trade. All right, let's see. Make a test. Coming in for a test of that current high of day. And I will get ready to plant a take profit at 21,459.50 if I need to. Curious how this test reacts of high of day here. Again, this trade taking its time, fully within reason this time of day. All right, and I'll plant at 459.50. Let's see if we can pop up there and get a fill. Took out a few stops. What do we say? Good for probably a 5-point pop. Damn near exactly what we got was a 5-point pop. Taking out those stops, maybe a 6-point pop. We can get about maybe 8 more points. Now again, 21,450, guys, tier 4 level. I'm hardly even thinking about it. It's just not quite relevant enough. All right, Bulls, let's get maybe a 10-point little push here. Get us up through 21,460. Yeah, we got room. Got room. Just need to see the Bulls show a little backbone here. All right, Bulls, there we go. Let's give us a little bit of a push. 10 points, 9 points. These slow markets, you know, ATR, the range of that last bar was 14 points. ATR is in the mid-teens. A little bit slower. Gotta be patient. All right, there's a push. 5 more points, 6 more points. Come on, Bulls. Let's see what you're made of here. Slow and steady. There we go. We are out there for a fill. Okay, so, well, guess what? I would call this break even. Okay, let me make sure we're flat. We are flat. So yeah, okay. I would call this break even, but we are technically in the green on the day here. 238 bucks, but listen, when we're like 150 bucks in the red, I'm calling it break even. So 238 bucks in the green, that's break even. Started the day with a like 0.9-ish R loser. There's then we had a 0.5 R about winner. And there is a 0.5-ish R winner. So break even-ish, a little bit in the green here today so far. That's how we sit. You know, again, when ATR falls, like it is right now, it's at 16.5. That's well below 25. I tend to lean heavier into negative reward to risk with the way that futures are priced. That makes more sense to me. We're clearly now developing some kind of an ascending channel. We'll see if that continues here throughout the day. But that's how we sit. Now, again, when you lean into negative reward to risk, naturally, the win rate's gonna start to rise a little bit. Does that mean you automatically have edge? No, you still have to have edge. But that's the part a lot of people miss. They say, well, why would you risk 2 to make 1? Because the win rate's a little bit higher. Okay. So, anyway, guys, listen, I hope you guys have a great rest of your day. Hey, remember, Apex for a few more days, 80% off, single day pass, which means you can pass an eval and be in a funded account as early as tomorrow if you use code BIG. But if you're like, you know what, I just want maybe a little bit more consistent revenue generation with daily payouts, Take Profit Trader is probably the best choice as far as that is concerned. Whereas Apex is amazing for scaling. They let you go to 20 accounts. Take Profit is 30% off and no activation fee, which is a big deal. To wipe that activation fee, that's over $100. No activation fee at all if you use code BIG. All right, guys, I will be live tomorrow morning. Pharaoh Friday, finish out the week, 8:15 a.m. Central Time. Hope you guys have a good day. Be patient. Let the trades come to you. Put on good trades, accept the outcome, and move on like a grown-up, like someone who's making money in this industry. All right, guys. Have a good day. I'll see you tomorrow morning.